Even though the weather doesn't feel like summer, the market sure does. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, May 29th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Looking at this week's activity, there are now 86 homes on the market, up 11 from the 75 we had last week. The average asking price on those homes is roughly the same, just a little bit lower this week. 4 homes went pending, which is one more than last week, but still a low number. The average asking price on those pending sales is low also, $1,549,000, but it is up from the $1,452,000 we had last week. And finally, 11 homes closed this week, but the closing price is much lower at $1,715,000, which is down from the $1,892,000 average closing price we had last week. So now that we know how the market performed over the past week, we can look at the broader trends that help us understand where the market might be heading. But before we do that, if you do find this information helpful, why don't you hit that subscribe button down below so you don't miss out on future updates. And while you're down there, you can send it to a friend also. Everyone deserves to be in the know about their local real estate market. Okay, let's look at those broader indicators. Like I said, inventory took another significant jump higher this week. This is the first time in months that the inventory climbed by double digits. Just like last week, the increase in inventory had less to do with an inordinate amount of new listings entering the market and more to do with the lack of buyer activity. We only had 7 homes go pending over the past 2 weeks, which will do little to maintain any reasonable inventory level, even if we aren't adding a lot of listings. Now, because we had such a low level of pending sales in our past 2 weeks, our turnover rate has fallen off precipitously. It's now at 28% of what a normal healthy turnover rate would be. On top of that, we are starting to see the separation of higher priced homes compared to lower priced homes again. The past 2 weeks, the average asking price on pending sales was $300,000 to $400,000 below the average asking price on all active listings. That means that we are seeing the sub $1.7 million homes sell, while the over $1.9 million homes are starting to sit longer. The over-under numbers are starting to match the rest of this trend lines this week also. The 30-day rolling average closing is now just under the average asking price for those homes. It is just 0.1% below the asking price, or 1/100th, I should say, 100th of a percent. So it's not significantly lower, but it's noticeable that it is below the break-even line now. If we continue to have slower weeks like we've had for the past 2 weeks, it will stay in the under probably be more firmly in that under range. The average sales price has fallen off lately too. The 30-day average is now below the 1.9 floor that I had been kind of talking about lately. It isn't too far below that 1.9 at the moment, but with the past couple of weeks pending numbers, it's likely to drop some more before it has a chance to rebound. Fortunately, amidst the otherwise downtrending indicators, the QQQ fund had another week of growth. It closed about 5% higher than the end of last week. This is the one shining spot in the otherwise discouraging week of indicator movement. Hopefully it's enough to encourage more decisive movement in the buyer pool in the coming weeks. And back to less positive news, the interest rates moved up a little more this week. The average moved up 2 basis points to 6.53, so it doesn't add much downward pressure on our already struggling market, but it does add a little bit. The reality, oops, are you not going to switch over for me? There we go. The reality is that the market is going to remain sluggish as long as rates stay up. There's still a chance that it'll improve to a 50% market like we have been seeing recently, as opposed to the 25% we had this week. But either way, the interest rates will remain the biggest hurdle to our market gaining any momentum. The other big headwind in this current iteration of the market is the general economic uncertainty surrounding oil prices due to the Iran conflict. Last week, there was noise about negotiations getting close to a more permanent ceasefire, but nothing concrete has come out of that. If the strait is reopened and oil prices come back down, then we should be able to rebound back to a 50% market, if not better. Thank you for joining me for this weekly update. I hope it does help you understand how the market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell down below so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful, confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.